Good evening, everybody. Welcome to the webinar. Today is October 27th, 2016, and we are going to talk about how to trade the U.S. elections before and after. We have less than 2 weeks to the U.S. elections, and I'm sure probably all of you have already heard at least something about it. Before we get into it, I want to welcome everybody. Welcome Angus, Alvin, Awurala, please forgive my pronunciation. Barzan, Lebona, Mohammed, Nick, Sohail, Rick, Melissa, and everybody else as you're joining us. Before I get into the presentation, can you please type in a Y for yes if you can hear me properly with no problems? And also, to type that, you have to go to your chat box and just type in that chat box, type in a Y or yes. Thank you so much. All right, it seems there is no problem with the sound, and everybody, I'm assuming, can see the screen, how to trade the U.S. elections. That is going to be important because we're going to do a ton of technical analysis. So today I really don't want to get into the politics. I do want to know if we have anyone from the U.S. joining us today, because that probably is going to, the U.S. election is probably going to affect you a little bit more than the others. And also, all right, so we have one person from the U.S. so far, and so today we're going to talk about Hillary Clinton and Donald Trump. The election is going to be on November 8th. And so before we start, actually, who does not know anything about the U.S. elections? All right, actually, that I think everybody knows about it. But let's say, write one thing that you know about Hillary Clinton. Anything that you know about Hillary Clinton. And then I'm going to ask you a different question just to get things started and have a little bit of fun before we get into the anything about. All right, yes, she was the first lady. That's correct. All right, anything about Donald Trump? Do you know anything about Donald Trump? That's correct. He used to be a real estate magnate. That's very correct. All right, so these are basically our two candidates for the U.S., and we're going to see what is going to happen before the elections, only a week and a half left, and what we're going to do after the election. So this is something that I have to show. High-risk investment warning. Trading on margin can result in losses that may exceed your deposit funds. Definitely do your risk tolerance and financial planning properly before getting into forex trading, and definitely go and learn more about leverage and trading on margin before using it. All right, so a little bit about myself. Okay, I'm getting a question. Do you work for Orbex? Well, that's an interesting question. I don't. It depends on your definition of working for Orbex. I'm not an employee of Orbex. I am the CEO of investdiva.com. If you're not already subscribed, definitely go ahead and subscribe on investdiva.com. Let me just give you a showdown on where it is. This is investdiva.com. Subscribe free. That is what I do, but since Orbex has been very passionate about education, we work with them to create their educational content and webinars and videos and so far and so forth. So that's what I do. I used to be an electrical engineer in Japan. I started trading in 2008. I made money. I loved it. I moved to New York City. I worked on Wall Street. Then I went on to publish a best-selling book on trading Forex. Now I'm a professor of finance at Baruch College in New York City. And I've been featured on a ton of medium, including Forbes, CNBC, Wall Street Journal, Times, CNN, and others. So that's a little bit about me. So today we're going to talk about the U.S. elections overview. We're not going to, as I said, we're not going to get into the politics side. We're going to focus more on the effect and impact on the economy and global impact We're gonna look at the historical charts of the markets, especially forex markets, under the Democrats and Republicans. And then we're gonna talk a little bit about Trump and Hillary's economic policies. And then the majority of our webinar, we're gonna talk on technical analysis and trading strategies for US dollar crosses before and after. So short-term and long-term, medium-term trading strategies for US dollar crosses. All right, everybody's good? Okay, so the most controversial US elections, as I bet you all know, it has become into sort of a TV show, reality TV show, and people are actually focusing less and less on the policies and more on the personal attacks and how these candidates personally, what kind of people they personally are, and there are attacks on both sides. We're not going to get into that. However, we do want to take a look at the a little bit of their policies of these two candidates, and that will give us an base ground on why the markets are reacting the way that they are to the polls results. All right. So this is actually, so the controversy of this election is very, very similar to what happened in the UK with the Brexit. Do we have anybody from England today, from the UK? All right, we have one person from the UK so far. Okay, so that's good. So you probably already know what was it like to be involved in such a controversial election, right? So, oh wait, hold on. These are okay. So Nick is from the UK, the First Lady. Oh, I'm getting more comments on Trump. He's a funny guy. That's true. And Hillary, she's evil. Well, that's interesting as well. Hello from Canada. All right, cool. So yes. And Canada is probably laughing at us, saying, "Hey, what's going on in the US?" I am in New York right now, for those of you who asked. So anyways, if you think Hillary is evil, Trump is a clown, whatever, we're not going to focus on that. That is your personal opinion. So Trump tax proposals, based on a research from Wall Street Journal, his tax proposals will boost the economy in the short run because they are very extreme, right? While Hillary's tax proposal will slow the economic growth in the long run. So that is one thing that will basically defines us as a short-term and long-term traders. So which one do you want? A short-term economic boost, or do you want a longer-term growth? And so that is also going to affect, obviously, the outcome depending on the victor and the election results. So these effects would reverse over the long term because Trump's plan would increase the federal debt and harm the U.S. economy, unfortunately, unless he proposes spending cuts far larger than those he has already outlined. And this is according to an analysis that Wall Street Journal released this Monday. Hillary's tax proposals will reduce gross domestic product, the GDP, in 2018 by 0.19%, below what it otherwise would be. So that is the short run, while Trump's plan would make it 1.12% higher. So that is great. So in 2018, if Hillary wins, we're going to see lower, perhaps, right, probably we're going to see lower GDP, while if Trump wins in 2018, chances are GDP might go higher. But by 2027, the market, Hillary's plan would increase GDP by 0.4% above the baseline projection, while Trump's plan would make it 0.43% smaller. So there is a definite trade-off between short run and a long run between the two proposals, and the numbers basically reverse sign, right? So another study comes from Wharton Budget Model, which is working with the Tax Policy Center in Washington, project of the Brookings Institution, and it is run by a former Treasury official from Bill Clinton's administration. And this study is limited in that it looks only at the candidate's tax plan. So that was a tax plan, right? And not the entirety of their fiscal programs. So for example, Hillary Clinton, she wants to spend money on infrastructure and expanding the social safety net. So her full plan wouldn't reduce projected budget deficits. Trump says lighter regulations and changes to trade policy could spur economic growth and cover the costs of his tax cuts. And he also says he will reduce some government agencies' budgets, though he has also said he would increase defense spending and protect Social Security and Medicare benefits. And so he would have to cut spending in half outside of the Social Security and Medicare to prevent his tax cuts from causing long-term reductions in GDP. So with this, I mean, so far what we've learned is that, well, Trump, there is a lot of uncertainty in what he is proposing, and there are so many factors that need to be changed, even though he tries to simplify it in one or two words, like make America great again, let's deport illegal immigrants. So these are very easy to understand, but based on the research that have been published from different universities and researchers, it's going to take a lot more than that. It's not just a catchphrase. Oh, and by the way, I just realized here it says that Hillary is 68 and Trump is 69. That changed. Hillary's birthday was yesterday, so she's 69. Trump's birthday, I think it was last month. He's 70 now. So a little bit of a misunderstanding right here. Anyway, so my point right now with that is that, yeah, as evil as Hillary, well, as evil as some people say Hillary is, or as clownish as some people say Trump is, their policies are what really actually matters at the end of the day, and that is something that investors and traders are trying to look a little bit more at. From what we know so far is that Trump doesn't have any experience in politics. He is very good with PR and promoting himself, while well, Hillary has 30 years of experience in politics, but she is not good at presenting herself, and she's very, very bad, basically, in facing the crowd, and she comes off as very standoffish. So she's not likable. Trump is likable, but her policies are, let's say, less uncertain. We know what we're going to get. She has been working on them, while with Trump, we really, really don't know what we're going to get. And that is something that everybody agrees on. Even Trump supporters, they know they don't know what they're going to get exactly, but because they're so frustrated with the U.S. as it is right now, they're supporting him because they want change of any sort. Now, how would the markets react to this? In general, markets do not like uncertainty. So no matter who you're rooting for, no matter how evil you think either of these candidates are, the matter of the fact is the impact of this election is going to hit the markets hard. This is a little bit of a policy issue on insurance. I'm not going to go over it because we don't have that many people from the U.S. today. If you do have any questions about their policy, I'm happy to answer. Just feel free to write them in the questions section. All right, so what we really want to look at, so something that you need to know if you're not from the U.S., you probably don't know, is that, well, Hillary is a Democrat. Well, the U.S., a little bit of a basics on U.S. elections. We have two parties, the Democratic Party and the Republican Party. This is the symbol of the Republicans. It's an elephant. The symbol of the Democrats is the donkey, which is pretty hilarious that they chose donkey as that. And there is a history behind that as well, which is pretty funny. And so Hillary is a Democrat. Trump is a Republican. And we basically had every 8 years, the office has been bouncing back and forth between Democrats and Republicans. Besides, well, the year after Reagan, that Bush, who was also this is the father Bush. We had Bush Jr., Bush Sr., and so he became immediately after another Republican. He became president, but his term was a little bit shorter, right? So this chart shows the U.S. dollar index, the which is the DXY, which is one of the many U.S. dollar indices that compares the U.S. dollar value to a basket of other major currencies. So this is one of the most popular ones. So this is basically how the U.S. dollar index reacted and performed during each of these democracies. So this has nothing to do even with being Hillary or Trump. This is just how the markets react during Republicans and Democrats. We're going to get into a little bit of a Dow Jones and stock market as well, but this is how the DXY reacted. So from back in 2019, I believe, yes, so this is 1982, right? So Reagan became president, incredibly popular. So during his first 4 years, the markets went up like crazy, and then at the end of it, the markets crashed and completely, basically, so this is the first 4 years, the second 4 years, it's basically evened out at the end of his term. He went up at the end, but then Bush became president and the market generally went down. Then we had Bill Clinton, who is Hillary's husband, became president. The dollar index, kind of consolidated at the beginning. It ended at the end of his term higher, right? So it generally went up. Then George W. Bush, Bush's son, became president in 2000, and then we had the financial crisis. We had the 9/11. All these happened, and the dollar index basically crashed to all-time lows. And then Obama became president. He inherited a crazy recession from Bush. He worked on it. So at the beginning, so this is the monthly chart, right? The first 1, 2, 3, like 4 months of Obama's presidency, the dollar index went up. Then it completely erased all the gains. Then it went back up again, formed a double top. It didn't complete it. And then since then, after his second term, after his second term, the dollar index basically started averaging out, shooting back up, and right now it's kind of consolidating, right? So I mean, a general, very, very general overview of this chart shows that, well, after Reagan, right? So the past 4 terms, the dollar index, and I'm getting a question, what is the U.S. dollar index? As I said before, it is an index that calculates the value of the U.S. dollar versus a bunch of other currencies, right? So that includes euro, pound, Australian dollar. So all of them have different ways, right? So in the past 4 terms, the U.S. dollar index value has gone down during the Republicans and have gone up during the Democrats. So this does not necessarily mean that this is exactly what's going to happen if Trump becomes president. He's a Republican, the dollar is going to crash, and if Hillary becomes president, she's a Democrat, the dollar is going to gain. But what is important from this chart is that the markets see this, right? The markets, the investors in Goldman Sachs and people who are like heavily investing in the markets and heavily trade the U.S. dollar, take notes of these kind of things. And those are the people who eventually move the market. So having this history is definitely not something that is in favor of the U.S. dollar under a Republican president, right? So this time it is completely different. I'm not saying that this is going to happen, but is that this happened before, and the markets do take note of these kind of fundamentals, right? So with that, so with this in the back of your head, so what we have in 1 week, we have 1.5 weeks left to the elections. The election is going to be on Tuesday, November 8th, right? I can't wait for it to come. I'm like really, really sick and tired of the elections, just like consuming all of my Facebook feed, right? But so before November 8th, what are we gonna do? So well, there are so many other factors also impacting the U.S. Also, for example, today we had a bunch of data coming out that we're gonna actually go and take a look at right now. Right now, while U.S. dollar is a little bit on the higher side, it's been reached a ton of our bullish targets, which is great. But and another big thing coming up, other than the elections, is obviously the interest rates and the Fed, whether they're going to increase it or not. But if we're solely looking at the U.S. election, so completely forgetting about all the other factors and only focusing on the U.S. elections, what we learn is that after each presidential debate and after each scientific polling coming out, the U.S. dollar has reacted. And in a nutshell, the U.S. dollar has been strengthening every time these polls gained in favor of Hillary, and it's gone down if the polls have changed in favor of Trump. And well, the main reason behind is that the uncertainty that a Trump victory could bring to the U.S. economy and the global markets, including U.S. dollar traders, hate. And I've been speaking to many fellow international investors over the past year, and it is apparent that the majority of them do unfortunately see a Trump presidency as a threat to the U.S. economy. And that's why they start dumping the U.S. dollar against the Forex counterparts every time the polls show Trump ahead in the race. So now let's take our own poll here. All right, we have a ton of people here. Who do you think, not that who do you support, who do you think will win the elections on November 8th? Let's take a poll. Not who you support, who you think will win. Hillary or Trump? All right, we're getting one. Hillary, Will, unfortunately, Hillary. Hillary. Do we have any Trump? Trump, all right, we got Trump. Trump, all right. All right, Hillary, another Hillary. Let's see. All right, so far the polling in this very small crowd predicts, for whatever reason, that Hillary will win. It is interesting talking to international people from outside of the U.S. People do believe that Hillary is going to win, but in the U.S., it's not the case. If you talk to people in Republican states who don't trade Forex, they really think that Trump is going to win. So one thing that is happening right now is that, not only Trump is, very interesting character, and he is very controversial, and he is a little bit uncertain in terms of politics. One thing that he has been saying is that the polls and the election is rigged. Rigged means it's not correct. It's cheated on, and the polls are not showing accurate results. And so that is very, very upsetting for Trump supporters. And so one thing that has been happening is that Trump supporters are getting very, very angry that they are threatening that if Trump doesn't win, they are going to start rioting. Actually, like today, one of the Republican, I think the guy was in the Senate or something, he was saying if Hillary doesn't, if Trump doesn't win, I'm going to vote for Trump on the 8th, on November 8th, on November 9th. If he doesn't win, I'm going to take my guns out and muskets out. So that is a little bit scary. And so that is one thing that we really need to keep in mind. So this is not a very typical election. If Trump wins, we obviously are going to have a lot of uncertainty in terms of economy and policy. If Hillary wins, we may have, again, uncertainty and rioting and a civil war even perhaps against her and against the government that could also impact the economy. So this election is a little bit like it's really, really hard to predict in terms of the outcome and the impact that it could have on the market. So if it was an ordinary election, we would think that a Democratic victory would immediately push the U.S. dollar higher. A Trump victory, because of his controversial background and his uncertainty, it would immediately push the U.S. dollar lower. But will that happen? Unfortunately, I don't think the answer is yes. I'm getting a question: are the tensions so strong? Civil war? Yes, the tensions are crazy at the moment. Like it has really become, unfortunately, a strong emotions between the Turkey and the U.S. right now. Unfortunately, is a very divided country, and so those who support Trump, they are full on supporting Trump. Those who support Hillary are full on supporting Hillary, and then there are those in the middle who hate both. And it's just really, really crazy times with a ton of tension, which is very visible everywhere that you go, especially on social media. If you follow any of these groups on Facebook, you'll see the tensions. So yeah, so with that, what are we going to do with our Forex trades? The election aftermath, probably right after the election, is perhaps the US dollar is going to be under pressure. One of the results, it will be temporary. The other one, it probably will be more long-term. Who do you think is going to bring the short-term results, and who do you think is going to bring in long-term results? Correct. So Hillary victory probably will bring a short-term pressure on the US dollar, and while Trump, that will probably recreate Brexit's impact on the British pound, but this time for the US dollar. So let's take a look. Let's take a look at we're getting exactly halfway through, so we're going to take a look at our charts to see what's going to happen. Okay, so first of all, again, for those of you who just joined us, don't forget to subscribe for PreAndyInvestment.com. I have a ton of free stuff that you do not want to miss out. So now, which dollar cross we're going to start with? Let's actually start with something that the US dollar is quoted first. All right, so we're going to start with dollar yen. Okay. Dollar yen. Do we have any dollar yen traders, Investiva students who are in the crowd today? Congratulations. If you were in a dollar yen bullish position based on our advice before, you probably made some money today. The reason why is that, all right, let's do a bit of a technical analysis. Add on my Ichimoku cloud, and then I'm going to add on a Fibonacci retracement. So what has been going on with dollar yen? Dollar yen started dropping like a hot rock beginning of 2016, right? So I'm going to catch this trend, and I'm going to grab it, bring it on. So this is our Fibonacci retracement level, and today we got to our first pivot level, 23% Fibonacci at 105. We just crushed it, which is great. And then our next target, well, long-term target. So we're going to see if this is actually going to happen or not. But so what has been happening with dollar yen is that, well, first and foremost, it broke above the Ichimoku cloud. That was our first signal today. It reached our pivot level. It's our short-term target, which is great. So what's going to happen in the next week? The one thing that you need to know is that, yes, so a lot of people think that Hillary victory will have a positive impact on the US dollar, but one other thing that you have to keep in mind is that that may already been priced in. So because as we saw in our poll right now, this small, tiny poll that we took in our chat room, the majority of people think Hillary will win. And because of that, and well, based on that, the markets have been reacting. And that is exactly when we say the news has already been priced in. So we could actually see further gains in the US dollar, let's say, towards 106 in the next week. It is a possibility. It is not for sure. It is not for certain. So here, this was like 105 was our like certain goal that we reached. And after this, we may get, oh, one thing that I forgot to actually cover was the other facts, because not only one thing obviously impacts the markets. Sorry, I had to take a sip of my coffee. So how is the other factors? What are the other data showing about the U.S. economy? So in October, we had the manufacturing PMI better than expected, so that was good. But then we had unemployment change lower than much lower than expected, lower than last time, so that was really bad. But then we had factory orders and other components coming in. There's a little bit mixed. The weekly unemployment rates have been, so this is the first week it went up 0.1%. Non-farm payrolls was in red, so that was not good, right? So we have a little bit of a misfortune on the US dollar, but even with those things, US dollar has been going up. So that is the reason why we kind of think. But I mean, the main thing that did help with the US dollar strength, obviously, was the FOMC meeting minutes that they kind of signaled that we could see another rate hike within 2016. But I really seriously doubt if Trump becomes president, they're going to raise interest rates because that will just create even more uncertainty. Jobless claims then second week went up. It has been bouncing up and down. Retail sales has been kind of mixed over here. Then we had, let's see what else we had that was very important. The important stuff over here, consumer price index. So the monthly consumer price index came in better than expected, better than last time. This is consumer price index except for food and energy. So that is a component of it that went down. So overall it was up, but the components, some of them were down, right? And then we had the housing was in red, building was in green. So it's been pretty mixed. And so the next thing that I wanted to see that came out today, actually, 7th, right? Yeah, so durable goods orders came in worse than expected. But then the housing came in better. Initial jobless claims have been going down. So we have actually a little bit more of a red than green. So this US dollar spike that we see, I believe, does have a lot to do with the election and the predictions that Hillary will win. But as I said, this is just market pricing. So short-term strategy for US dollar today, because we had this massive gains, there is a good chance that we're going to see a little bit of a retracement. We're going to see a pullback of the dollar yen when it goes and attempts this pivot, well, technically speaking, one more time. So I would wait a little bit. If you're not already in a bullish trade with dollar yen, you might want to wait a little bit for a retracement and then get back in. But definitely, if you are just getting in a dollar yen position, make sure you are doing a short-term with low leverage, because the next week, and especially right before the election, you remember what happened with pound. So let me just show you, because I mean, this is interesting, because with pound dollar, also majority of people thought that Brexit is not going to happen. Pound USD, right? The majority of traders thought it's not going to happen. And look at the volatility right before Brexit. The volatility right before, so this is a week before Brexit, it went down like crazy. And then right before the referendum, it started going up. It even broke above the HMO class. This is the night before the referendum. And it just went like at May, and so it went on a 1 month highs. It went all the way to 150, and even like at the night of the referendum, it tested 150, which is like a high that had not been seen since 2015. And then bam, the results came out. So what I'm trying to say is that next week is going to be incredibly volatile. I do have students here who tried trading the Brexit, and it was not great. I'm getting some questions here. I will, when you finish this, can you advise on S&P 500, 9th of November? Thanks. Yes, absolutely. I'll if we do have time, I'll definitely try and get into that. Otherwise, I'll introduce you to other sources for S&P. All right. So anyway, so this is what happened with Brexit. Many people didn't think Brexit is going to happen, and the results was pretty tight, right? And this is what happened. Then it consolidated, right? And then after a few months, it dropped even more. People ask me, do you think it's going to drop even further? The answer to that is that I actually don't know. And the reason why I don't know is because it's just uncertain. So I have been staying away from long-term pound trading. So here, I mean, we thought around here, we thought pound has bottomed out. It went up. I did get into a bullish trade. I got out immediately, and then it dropped, and it's now consolidating. Where it's going to go after this? Well, we have March coming up, but also, so with pound dollar, I'm sorry, I'm just jumping. There's so much I want to tell you guys. So pound dollar, it's a little bit different than pound yen, because now we have dollar in form as well. And the stronger US dollar gets, guess what direction the pound dollar moves. So if pound dollar gets stronger, if the US dollar gets stronger, like today, US dollar got stronger, pound dollar, because the US dollar is quoted second, pound dollar goes down. And this is what's happening right now. So in case of a Hillary victory, in the long run, well, the US dollar might get stronger, right? And then that will even put more pressure on the pound dollar pair. Trump victory might actually spike. So for those of you who are bullish on pound dollar, that is something that you want to. So let's go back to dollar yen, right? So pound dollar is the most unpredictable currency pair at the moment. Just so you know, I would say stay away. Dollar yen is a little bit better, because all Japanese yen, we know exactly what they want. They don't want strong Japanese yen. They try everything they can in their power to keep dollar yen above 100, and this is exactly what happened before. They tried the 100 level 3 times, right, since June, and then it eventually broke above the HMO cloud. And Japanese yen does not move the market as much as the US dollar. As I said, if you do want to trade beforehand, before the election, try to do a short term. Maybe get on the 4-hour chart. Now, I normally don't recommend trading on the 4-hour chart, but right now the daily chart is a little bit too uncertain. And what is going on with the 2-hour and in the 4-hour chart is that, well, it's obviously a ton of volatility that we see here. It is above the HMO cloud, but with the 4-hour chart, the reason why we do that, it's not that different. The only difference is that you can create shorter term targets, right? So if you do a bullish scenario for dollar yen, again, it really highly depends on your risk tolerance. If you don't know what your risk tolerance is, stay till the end of today's presentation. I have a great discount for you to come and talk with me privately to really calculate your risk tolerance and calculate your financial plan, see what you should be doing. If you do know your risk tolerance, if you have higher risk tolerance, a medium term, a short to medium term before the election target for dollar yen, I would say should be no higher than 105.70. Can everybody see this? I'm going to write down the target in the chat box because I know that it's a little bit small over here. Let's see. We have the chat box. So 105.60, right, is our short-term bullish target for dollar yen for those with high risk tolerance. If your risk tolerance is low, stay away. All right. Then alternatively, where should your stop loss be, right? So stop loss, again, if you have high risk tolerance, well, you can stay around. I would say actually, because only people with traders with high risk tolerance are trading this, I would stay around. I wouldn't keep my stop loss very loose at this moment because of the crazy volatility that might happen. I would keep my stop loss at somewhere around 102 or even 100, because on the day of the election, we could see crazy swings, but then it could just retrace and erase all those swings the next day. So from today until, 2 days after the election, definitely try and loosen up your stop losses. And definitely do not trade on high leverage. I cannot say this enough. It's very important that you don't use high leverage right now until after the elections. All right. So bearish scenario, we don't have any signals for the bearish because of all the things that we've said before. So I'm going to move on to what is the next currency pair that you want me to cover. Let's take a look at dollar CAD. If you have any recommendations that you want me to cover immediately, just put it on the chat box. But I do want to take a look at dollar CAD as well. So dollar CAD, it's not only based on US dollar, obviously. Canadian dollar has been on, especially because of oil and what has been going on over there. I'm going to take a look. I'm going to go back to the daily chart for dollar CAD. So, but dollar CAD also, well, similar to dollar yen, as you can see, has been here. We had we've had 3 different reversal signals. Broke above the HMO clouded, formed a bullish engulfing. And right now it's moving inside. You can guess. It's moving inside and upward channel right over here. Right, so this is the range that has been moving, right? And there is a good potential that we're going to see this movement going back up. So let's take a look and create our support and resistance Fibonacci. And so right over here, we have our pivot level created at almost 130. Then we have next stop 23%. 38% Fibonacci level. We already broke above it. So that is again yet another bullish signal. The next stop, which is the most important Fibonacci retracement, 50%. Color it green. This is our bullish target. If the elections were not coming up, I would be very bullish, and I would be targeting 135. I'm not saying that, again, I'm not saying that this is not going to happen. However, because the elections are coming up and it's only less than a week away, I would lower my target, my bullish target, to even lower than that. So this, we already actually reached it. The next target, perhaps somewhere around here, so 134.50. I wouldn't go above that. All right, so this is 134.50 as a bullish target for dollar yen, but dollar CAD. But again, so we've had a spinning top today with dollar CAD, which is a little bit different than what we saw with dollar yen. And tomorrow we probably are going to see a little bit more of it. So after the spinning top tomorrow, we really want to wait and see what's going to happen next. One good way to get in, if you do want to get into in a bullish scenario, I would say, again, don't get in right away because the market can definitely retrace back a little bit. So you can create a limit order at, so with that, again, because we're trading a little bit shorter term. Oh, it's retracing already. I told you. All right. So with that, I'm going to actually create Fibonacci level here to get our, no, this doesn't help. All right. Unhelpful. So we'll do this new uptrend. Okay, there it is. 23% in the new uptrend. There is a good chance we're going to see a retrace back to this level. So 133.65. All right, so you can set a limit order, a buy limit order to get in a dollar CAD at 133.64. Get out either, so again, depending on your risk tolerance, you can get out at either, let me see if you can see this, right? You want to make sure that you can, see everything. So you want to get in at 133.62 and you want to get out at, so for those with lower risk tolerance, you want to get out at where it was today. This is 133.90, the first target. And then next, back to the daily because it doesn't show it to us, right? So you can get in at 133.60, get out at 133.90, 30 pips, not that bad. Just repeat what I just said. I definitely will. What did I just say? So get in, get limit order. These are just, by the way, these are just commentary and recommendations. I'm not saying this is what 100% going to happen. Please don't sue me if something happens. This is, you really are in charge of your own risk management, all right? These are just market comments. So limit buy order, I'm going to write it down, right, is at 133.50, right? And then you get out, you can have your first limit sell order at 133.80, I'm sorry, 90, 133.90. And then the next stop for those with higher risk tolerance is 134.50. Okay, 134.50. 134.50 is your second bullish target. All right, everybody got it? And so our ultimate resistance with dollar CAD is the 50% Fibonacci at 135.50. That is the ultimate bullish target for very long-term traders, high risk tolerance. All right, otherwise get out early. Right now, before the elections, as I said, your goal is to catch as any profit as you can, as much profit as you can, and get out before the elections. After the elections, all right, I have actually, let's talk a little bit about that. After the elections, Trump victory, do not trade it. Do not trade it. Dollar might drop like crazy. What I'm going to do is, again, I'm going to take note of how pound dollar reacted to Brexit. So it dropped like crazy, went down even afterwards, and then it retraced just a little bit. So in case of a Trump victory, the only way that I would recommend trading is, again, very minor retracement and range trades. So you wait for the initial crazy impact. And then when you see a little bit of a, well, like 2 days later, 2 days after that, you can consider getting into a correction trade, very small, you know, small targets, and get out immediately. And after that, well, we're going to have another webinar to talk about what to do in the long run. Hillary presidency, Hillary victory, again, don't trade immediately, but in case of a Hillary victory, we could see a little bit of a pullback again. So let's go back to dollar CAD, right? So Hillary victory would actually be a great time to buy. Because we could see a short-term bearish movement, not only on the dollar process, but also in S&P 500 and Dow Jones. So we could see a pressure, right, like on November 9th, the markets could drop. But because with Hillary, we have a little bit more of a confidence in the long run, long-term traders, that day is actually a good day to get in and buy at low prices, right? So with Trump, we're not going to get into a long-term trade because we don't know what's going to happen next. With Hillary, we could get, that is going to be bargain trading. All right. So we had a question about how the S&P would work. I'm gonna quickly go through that, and sometimes this thing just, I do not know what is going on with this. NP. All right. I think my chart just completely crazed up. And so I'm getting, okay, another question. How much money should I invest in Forex? That again, it really depends on your risk tolerance, on your financial goals. Normally, we say that the amount that you should be spending on in Forex trading is about 20% of your total investment. So you definitely shouldn't be investing all your money in Forex. And then the total amount, again, depends on your emergency funds, on your savings, and on your potential growth of wealth. You cannot just, Forex trading cannot be your only job. Let's put it that way. You have to have a different income source, and then use that 20% of that income or your savings maximum on Forex trading. All right. So again, thank you guys so much for joining me today. That was Trump versus Hillary. If you have any questions, I'm getting another question. Do I have a recorded version of this session? Yes. So I'm pretty sure that you got into this by signing up on Orbex.com. So they are going to provide you with a link of this video recorded. The links that I just shared with you are not going to be available on the recorded version, so definitely click on them and at least save them for now. However, the recorded webinar and everything that we went through is going to be this. For those of you who just joined us or joined in the middle of it, the beginning of the session, we were talking about the differences between Hillary and Trump, how the markets react normally during Republicans and Democrats, and the aftermath of the election. That was a majority of our webinar. All right, so unfortunately, I don't have more time for our next question. Thank you so much again for joining us. See you after the elections. Please trade responsibly. This is very volatile times, and I hope you make money and enjoy making pips by trading Forex. See you all next time.